welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello everyone, welcome to the RationalInvestor.com's Daily Brief. Nope. That's not what this is. This is the broiler chickens. It's funny how I get sort of your brain gets like sort of one directional memory path. I was trying to pull up the newsletter while I was as soon as Chris said and your mic's live, I try and do two things at once and do the Broiler Chicken Show, buck buck buck. 14th of April, 2023. So T minus, what do we got here? 1, 2, 3, 4, 5 days, 6 days. I'm not exactly sure what the actual stopwatch countdown is. I suppose we could probably find sources online, but usually, you know, in this silly internet world, you can probably find three different countdown clocks that have completely different times. Seems like nothing is really real anymore, this silly internet online world. Anyway. I think I've told you guys lately, I'm feeling awfully nostalgic. The days of getting price in the mail. It sure made life a lot easier. Anyway, welcome back to the broadcast. I think it's a little bit of a sanguine note for myself today. Of course, here in the Communist Republic of China, we have tax deadlines coming at the end of the month here. So I had to actually leave our Friday meeting, and too bad. Murat did a very, very good presentation. And actually what was really cool, if you get a chance to watch Murat's presentation on Friday, was the juxtaposition of the first 2 weeks study and our general sort of themes of what we're seeing in the marketplace. And if you're not familiar, the first 2 weeks of every quarter, usually you see mutual fund managers. They get given a whole bunch of money to invest in the market on a quarterly basis. So first 2 weeks of the quarter is often a nice little tell as to sort of where they think we are in the economic cycle. Excuse me. We just did that module in the level 3 program. Sector rotation with Mr. Sam Stovall, famous market participant. And it was such a good model. His son actually came along and followed in his footsteps, and literally just took over the business when Sam died, if I'm not mistaken. Anyway. So really, really good, you know, for TRIers who are watching this video on YouTube. If you're not familiar with sort of professional market tools, things like sector rotation are probably just right over your head, and you know, understandable. But what I wanted to say was I thought Murat's study, you know, he does a lot of the relative rotation studies. I thought it was fascinating how actually that corresponded very closely with what we're doing in the first 2 weeks study. Super cool. So really nice presentation, but I had to leave early. I would have loved to have just stayed and chit chatted with Murat, because as our level 2 instructor, he's just a wealth of information and one of the nicest guys you'll meet. In fact, actually, I'm representing Germany here today because Murat's in Germany. He was an old police officer in Germany, so go figure, eh? But our German lady, I think was her name. Anyway, she gave me this shirt to give to Liam, but Liam didn't really take to it. I actually like it even better. Anyway, I've been wearing it a lot lately. So representing Germany today. Anyway, and I thought it was interesting. There was a fun little thing on YouTube where they were quizzing university age students, and none of them could remember the capital of Germany, which I thought was shocking. I suppose that's a commentary on our education system. What do you do in an environment like this? Do I sit here and go, "I told you so"? Do I sit here and brag about how smart I am for not chasing and for not getting all wrapped up in the "this time it's different" conversation? Um, do I think I've told you guys repeatedly that half of my job is just simply to try and impart on you just what professionals do, try and get you thinking like an institutional trader. It doesn't surprise me to see what's happening in the market. And if anything, it just speaks to the unintelligent nature of our society and what's happening with this social media stuff, where male bravado is more important and more significant than actual reasoned thinking. And if I can pump up my chest and it seems like, I guess what's ending up happening is, kind of flexing, if you will, that kind of thing. It's done with like visual images of material wealth, Gucci sweaters, Gucci shoes. I mean, no offense. I would never wear Gucci clothing. When I grew up, Gucci made watches. I don't know how the hell they got into the clothing business. Anyway, that's another conversation for another day. I suppose Gucci handbags, right? Ooh. Anyway, and I actually do find it interesting that when I was like 20 something years old, men didn't really flaunt things like clothing. It wasn't really that big of a deal. But nowadays, it seems like in a weird sort of way, men are almost more fashion. What do they call those? Oh, hello. Well, my window is deciding it wants to be a part of this conversation. Anyway. Um, anyway, I just find that what do they call it? Like fashion horses or something like that. But when I was growing up, men never really did any of that stuff. It's very bizarre how this world's just turned on its head. Anyway, doesn't really matter. Newsletter. Um, I'm a little bit lazy, to be honest with you right now. Like I said, I'm kind of wrapped up in tax kind of thinking right now. Not really too motivated to really do anything in the market too much. I think I have clearly demonstrated to all of you what I think is likely to happen here. So I don't think anybody can be like, "Well, we've never heard you talk about cautionary notes before, Brian." So it's not really, there's not really a heck of a lot new I can add to the conversation. But in sort of my kind of lazy kind of almost feeling right now, I've actually kind of downloaded a bit of this weekly write up to Chris, and Chris is employing this artificial intelligence to do sort of a summary of the news here for this newsletter that we do. I don't think there's anything wrong with this write up, but just it does feel like it's a bit redundant. I also think too that in a weird sort of way, and actually we even saw this on Friday to a certain degree, and Thursday, you get certain price action in the marketplace, and the talking heads, and I hate to say it, but if you go to ChatGPT and say, what happened in the market kind of idea, it is just going to it is literally going to spit out almost exactly the same message as any sort of, national broadcasting corporation, or, you know, sort of national media outlet news kind of regurgitation system. It's very canned, and I actually don't think it's really all that accurate. It sort of tries to craft the narrative based on what's happening in the world, but I don't think that the stock market selling off here has anything to do with things like bullets flying in the Middle East. I mean, no offense, but since I've basically been alive, the Middle East has been on the edge of war. I mean, it's never changed. Nothing ever changes there. It's always the same. So now all of a sudden you get the market selling off and everybody's blaming on, oh, well, Iran is doing this or Israel is doing that. That's a lot of horse shit. I'd actually say that it's more accurate to blame things like the celestial events and these eclipse cycles than it is to blame the Middle East for geopolitical concerns. And I do find it in a weird sort of way, it's sort of like there's a rising and falling tide. And, if you were, say, sitting in the island of Hawaii, and it was like 500 years ago, and the tide comes in and the tide goes out and the tide comes in and the tide goes out, how do you explain that? And then more importantly, all of the behaviors, all the marine life around the waterfront, maybe even, like the trade winds, they come, they blow one direction and then almost right on a dime a certain part of the year, all of a sudden they change direction and go completely different direction. I mean, how do you explain that? And of course, birds migrating, maybe different fish in the water migrating. How would you explain that if you were just sitting there going, just, one human to another? It would be very, very difficult. So in a weird sort of way, I actually think that that's probably more what's going on here than just blaming geopolitics for certain events happening in the market. And I even put a tweet out the other day, but I don't think so, because the responses that I'm seeing in social media right now, it's weird. I don't mean to be rude, but is the collective educational, I don't know whether educational is the right word, but almost like intelligence, the collective intelligence of the human species falling right off the cliff? I mean, it's shocking how unintelligent I see a lot of this social media stuff is. Like, just blatantly stupid. Like Gucci sweater guy. I mean, that's just stupid. It's irresponsible. And it's like we're going backwards as a species. We're not going forward. We're actually going backward. And we're falling into all the traps that humans have fallen into in the past. And why do the humans get so angry? I mean, why was that guy's room full of fucking people? $5,000 course, can't figure it out. Still don't even know what the hell that was that they were supposed to learn from that. Mind you, obviously, the part of the conference that wasn't recorded was probably where all the good stuff was. So I'm a little disillusioned, to be honest with you. I'm starting to actually, like, seriously, folks. I've been doing this for 10 years, and frankly speaking, the course material that we thanks, Cole. Appreciate it. But I hope you understand, Cole, that you are the minority. You are not the majority. And I actually think that, especially if you go overseas, the majority is incredibly, you can't, it's not really fair to say that they're just stupid. Maybe it's just that they're just uneducated. I don't quite get it. It's baffling. Anyway, So I think on balance, I think if you would use some just basic logic, seeing the way that the humans were acting as price was ramping up here through the latter part of the winter, understand the basics of seasonality, um, sprinkle in a little bit of Cole's eclipse talk, sprinkle in a little bit of buy the rumor, sell the news, big fundamental event windows. And actually, everything that you're seeing in here is incredibly cliche and incredibly normal. What I really don't like, and hopefully they get a little bit embarrassed by this, is this whole this time it's different narrative. That's really amateur. And whoever sort of got sucked into the this time it's different, you have to learn from this. As soon as you hear someone say that, you have to instantly go, oh shit, that's exactly the thing I didn't want to hear. And that in itself has actually validated that this is exactly the same and is it totally nothing different here. As soon as you hear somebody utter those words, you can literally set your watch. We're within days, maybe weeks of some sort of major pivot. So that was a little disappointing to hear all that kind of talk this last cycle as well. So I don't know what you do if you go if you if you do this based on sort of my thinking. Um, it's difficult, and I can understand why professionals now. I mean, I remember my old buddies at the old prop firm Top Step, and I'm actually so pleased to see so many people that we have educated have gone off and made Nebraska tons of money. That son of a bitch someday should fucking thank me for all the people that I've sent him. He never will. Anyway, that's another conversation for another day. But I can I can completely understand the reason why I put this chart here specifically this week was actually we've done this trade now twice. I mean, it's exactly the same trade, shorting, reload short zones on bearish momentum divergence and market structure. And the irony of it all is even the price pattern itself is basically replicated in Adam and Eve setup. It's stunningly cliche. And yet the irony of it all is like when I strapped on this most recent short and I went into the TRI lounge, God, everybody and their brother was just uber bullish still. And I'm like, what? Is nobody else going to be on this short trade with me here? Why am I even wasting my time trying to do this site and this education program? I'm clearly not getting through to any of you. I'm a little disappointed in how all of this has gone down, to be honest with you. But if anything, it's a good thing because the whole reason why I started this site was I was sort of hell bent on I'm going to make a positive difference in this world. I went through an absolutely horrific life tragedy that I'm still living with today. And unfortunately, in that tragedy, because of the circumstances, that it completely undermined my self-confidence. So in a weird sort of way, I'm actually getting to the point where I'm like, you know what? I don't need to prove this to the world. I'm just going to go do it myself. Anyway, I hope for all your sake, I still have some more gas in the tank. And I mean, I know the good part about it is we do have some longtime viewers here, like Adam, Sacramento Slap, Cole, right? Nure. I mean, I could go on and on. Most of you over there are that I see chatting over there on the YouTube page are old timers, OGs, I guess. But for the new people, Now do yourself a favor and get your goddamn DMAC. Well, you don't like me, DMAC, when Fjord's on the call. You're just like, shut the fuck up, Brian. Just kidding. But anyway, you new people, I mean, I can absolutely tell you without a shadow of a doubt, this stuff that I'm trying to teach you works. It is the way, the process. And I find it incredible 10 years down the road. Not really that many people watch this. And I'm having a very hard time getting you people to emulate the behavior that I wanted to see. And really, we don't even have that many OGs that stick around the site. So anyway, there's a bunch of rhetoric. The issue here now, unfortunately, especially with regard to something like Bitcoin, is I have a sneaky suspicion that we're probably going to spend the next 6 months or so kind of just backfilling what we've done here over the past little while. If we look at things like the stock market, one of the oldest, simplest rules is the 50% rule. You can clearly see where the 50% level of just even this move since last October is. So that means by definition, even from where we closed out on Friday, we should probably look for the better part of a 10% correction in the market from these levels. And they'll be printing in the news headlines that, woo, 11, 12% correction from the highs. I mean, you can see this big old hole on the charts here. Anybody's been working with me for a while knows. These gaps, of course, like to get filled in. So I wouldn't be surprised if we change this is probably a mountain man level. Good old Brandon. Boom. There you go. Look at that. Like clockwork. So I wouldn't be surprised if our ultimate destination on the stock market is, probably a good 15, 20% correction off the highs. Some sort of orgy of selling here. Also, for whatever it's worth, I'm hearing a lot of people say that there are a lot of historical sort of, I don't know whether any of you studied Nostradamus, but it turns out he has a prediction for the middle of May 2024 in particular. Also, I saw one other specific reference. It was like biblical or something like that. May of 2024. There's supposed to be something really nasty that's supposed to happen here in May. Maybe a nuclear bomb goes off somewhere. Who knows? I'd also say too, the more and more I see, the more and more I believe that China, it could literally dissolve into some sort of nasty civil war at any given moment. Any moment, the whole fucking thing could collapse. I don't know whether you saw the "It's Murder Season" tweet. One gentleman that I like to listen to rants about China did a video recently. I mean, it is absolutely horrific what's going on inside there. Still find it hard to believe that people in the West, it's weird when I talk to people about China, they kind of go, la, 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 can't hear you, don't know what you're saying, doesn't mean anything, la, 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 la. It baffles me. But anyway, we'll see what happens. I suppose the one good thing about us living in the West, and let's hope to God we can hold on to this, we are all entitled to our own opinions, including Gucci sweater yahoos. And we used to always say, that's what makes a horse race. Is at least you have the ability to place your bets. I'm gonna bet on that horse that's limping and that just lost a horseshoe. Yeah, that's the one that's gonna win the horse race. I don't know why that's such a good idea. But hey, it's your money. You put your money where your mouth is. Um, this decade, 2020s, this is a tough, tough decade. I know Chris had suggested that for the video here today, maybe we try and talk a little bit more about the whole inflation situation. To say it, but there were people actually that I respect in the social media field. That almost sounds like an oxymoron. One thing that I thought was so freaking cool last week, I couldn't believe it. Somebody and it was when I was out with Liam on Thursday, and this is probably the number one reason why I have to continue doing this. There's crypto social media, the whole thing. There was a broadcast and somebody posted in the lounge, hey Brian, you got to see this video, and specifically this specific mark in the video. And the guy being interviewed was like a total like crypto OG dude, makes tons of money, blah blah blah. And he goes, I don't listen to anybody, and frankly speaking, you really shouldn't. You shouldn't. You should never be in a trade and say, if somebody asks you, like, why are you in that? Why are you invested? And your answer is, well, because this guy said that it was a good idea. That is a potion for disaster. If you ever find yourself in that position, maybe you should reconsider why you're actually even in this to begin with, because that's just and 9 times out of 10 that ends in failure. Anyway, so he goes, the guy's being interviewed. I won't name names. I mean, I'm sure probably all of you that watched this video saw it. It was so cool. The guy goes, no, I don't listen to anybody. I have my own sort of bent, and if I take a trade, then it's my trade and it's my fault. And then he goes, in fact, I base all of my analysis, all of my work, and all of my behavior in the market on this one guy, Brian Beamish. And I was just like, wow, where did that come from? Holy shit. That was pretty cool to hear. I gotta say that did put a warm spot in my heart. So over the past 10 years, I have gotten through to some of you, so that's good. Try and be the demonstrator of best practices, but I don't ever tell you what to buy or sell. Frankly speaking, I couldn't care what you do with your money. What I try and do is I try and sort of teach you all how do you go about running a small business of trading with the expectation of your business actually being profitable. And I can tell you, Mr. Gucci Sweater, I don't know whether that guy's business of trading is profitable. I know his business of selling $5,000 courses is pretty darn profitable. And I don't know about buying Bitcoin above 70 G's. Oh my goodness. Anyway, so that one guy saying that really put a smile on my face. That was super cool. So one thing I will say that I do have is 35 years experience. Got a little bit of market wisdom, but at the same time too, I'm never going to tell you what to buy or sell. Never, 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 never. I don't want to name names, Andre. If you want to figure that out, go and look at my Twitter feed, my personal one, not TRI stuff. And you should be able to figure it out. It's almost funny. It's almost like that's a meme unto itself. As soon as you start to see those guys starting to appear, we're near the end of the run. And for God's sakes, if you ever hear anybody say this time it's different, oh, please. If anything, take a screenshot of that. Take a timestamp. Say, all right, this guy just officially called the top of the market, or even the bottom of the market. It works both directions. So I thought it was interesting just in this particular week's newsletter, um, you know, talking lots about the inflation issues. There's one guy that I actually really like to listen to, although I think that he is a very sort of like real time market commentator. I don't think he has enough history in the market to really understand like fear cycles, greed cycles, all that kind of stuff. But he had pointed out last September in his social media posts that there was a significant problem that was brewing in the US corporate debt market. And you can see mysteriously out of nowhere, the whole stock market was making lower highs and lower lows. I mean, pretty good looking bear market. And then all of a sudden, it just turned straight up. I mean, it didn't even give like a W or anything. Just fuck you. I'm heading up. The question is why? Why would something like that happen? And it turns out, this is where our society is really, really suspect. When we look at the bond market, we actually get the clue as to what happened. You notice that last October, all of a sudden, these bonds all started lifting. Look at all the little W's that came in here right across the bond market. This is the short-term interest rate proxy. This is a 2 years. We used to use the euro dollars, which was such a great tool. We used to call it the TED spread. And of course, as soon as the 1% figured out that the public actually had a beat on them and actually had a way to sort of figure out what the real economy was doing versus what these, bureaucrats, central planner, communists. I mean, I hate to say it. I actually think the United States of America is actually, you can make the argument that the United States of America is actually the biggest socialist country in the world. That's the irony of all of this. And I think you can also make the argument that because of the immense power that's concentrated in just a few people in this whole banking cartel, to all intents and purposes, it's basically the same thing as any communist, Politburo, Central Committee. It's basically the same thing because I think you could make the argument that the stock market and society was going through the process of correcting. I mean, we are living in an absolutely insane world of debt, right? You all know this. I mean, unfortunately, and don't get me wrong. I mean, if anything, the Americans are in a much better situation because all the rest of us idiots around the world, we're all dependent on these people. I mean, you see the numbers here. This is laughable. I mean, the irony of it all is if you sat there 100 years ago, yeah, very good point, Cole. Very good point. Probably a guy over at Goldman Sachs, Cole, but that's another conversation for another day. So, I think you can make the argument that the whole system is broken. It's all completely broken. And we're just living on borrowed time. The question is, when does this facade eventually collapse? I suppose you could argue that's half the reason why we're all in Bitcoin and the like together, right? You listen to guys like Michael Saylor, and all you need is like a tenth of a Bitcoin, and you'll be stinking rich. But the problem is how many of these currency units is it going to cost just to buy a damn loaf of bread? So the only way that they can the end of all your price tags. Add another zero onto the economy. Add another zero onto your paycheck. Add another zero onto your rent. Add another zero onto your loaf of bread. Add another zero onto your dozen eggs. And then that way, this con job of currency, fiat currency system can continue. Sad. And, I mean, the irony of it all is that actually there was a really good graphic that I had. Chris kind of encouraged me to try and get these resources ready ahead of time. So I went and found my old, I love this website as just a graphic illustration of what the inflation was back the last great reset. And of course, if we're talking charts, I can always show you, where is it? Over here. What I think is going to happen if they pull off the con job is we're going to be continuing to inflate ourselves to just astronomical levels. Where's that one? So this is probably the path that we're going to follow if the banksters can pull this off. Just to add another zero onto the end of your life. And that's this image. So, it's fascinating that it was exactly at this point right here where the banksters officially took over the US government and US society. And this is the world that we're living in, of this just this is basically a generational cycle. This is the next generation. This is the next generation. And of course, this is, your millennials here. And as long as you just keep accepting that, hey, every, roughly 40 years, we just have to add another zero onto the end of whatever the price tag is. And this will just indefinitely inflate. And you will think that your life is just getting better and better and better as the stock prices just keep going higher and higher and higher. But really, it has very little to do. And ironically enough, what's supposed to end up happening through these generational cycles is the generation goes through a very normal growth cycle. And then generation goes through a very normal regression cycle. And ironically enough, this index should actually basically stay the same through the entire generational cycle. It should go up and then it should come back down. And if you look back in like the 17th century, 18th century, it's actually how stock markets actually behaved a lot like this. So this is the Emperor's New Clothes world that we live in. Sadly, if we look at the actual, and unfortunately we are in one of those great reset scenarios. Actually, probably the better chart for you to see is, it might be interesting to see what that is, but here we'll look at the, what do I want? I want the generational cycle. There it is. Oops, let's try that again. Macro generational comparison. So this was the post World War II Great Reset. It was all about the Bretton Woods Accord and trying to reestablish the monetary system following the end of the I don't know whether we call this isn't the greatest generation. There is a name for this generation. It was sort of like the post US Civil War, post Gilded era, Gilded Age, if you will. And what's interesting about this world is actually this is sort of the world that I grew up in, and actually incredibly similar. The only difference was this spike here in this particular cycle. It came in the 1920s. In our particular cycle, it came into the end of the 20th century, right? End of 1990s, beginning of 2000s. And interestingly enough, if you actually take out the money dilution, right? If we work with the money dilution, then you go, well, I don't see any comparison, Brian. Looks like stock market's making new highs. What are you talking about? There's no hard times here. And then if you actually take out the money dilution, you actually see that we even now are still way, way below the peak of our society through that dot-com boom. So it's quite remarkable how still, even this is now over 20 years later, and we're still living a worse standard of living right now. Most people just they can't understand this. And when I do try and explain this to people, it's like they just, glazed over look, and there's nothing we can do about it. So what's the point in getting upset? Because, these bankster crooks, we're all slaves to them. So get used to it. I suppose at some point, millennia ago, we would have been having the same conversation about the Illuminati and saying, well, there's not really much we can do about it. We were built as a slave race to mine gold for the Anunnaki. And if you complain, off with your head. We got rid of the Illuminati, we got rid of the Anunnaki, but we still seem to be living in this slave status to these goddamn bankster crooks. And they've done it. So, there is your real sort of, this is our standard of living image. I think it's such a cool image, I'll tell you. If I was going to go on a speaking tour, this is probably the one image that I would do my whole sort of conference on. This is what you're told is society, and this is reality. Blue pill, red pill. Right? And, in this kind of world, right, Bitcoin doesn't do anything. In this kind of world, Bitcoin just goes screaming higher and higher and higher and higher and higher. I don't know. Maybe yes, maybe no. So, the problem here is, are we done with the inflation problem? What's fascinating, if we go back to this inflationdata.com, there's a nice website. And actually, I thought it was interesting. I saw somebody post in the lounge earlier today a image of Larry Summers, who, what a character that guy is. Missionary generation. Oh, thanks, Bob. Here's a good website for generational cycles going back centuries. Your question, the name of the post-US Civil War generation in BCS. Missionary generation. I did not know that. Learn something new every day. Actually, when we have the AMA documents, so before I waste too much time with political rant, rhetoric, nonsense, should probably just check in, see if there's any questions this week. It's turning into a pretty big document. Eh? Well, there you go. Well, there's a whole bunch of stuff. All right. So be sure if you do have questions for me, be sure to write them down here, folks. Anyway, so obviously the main topic of conversation here today was all about this inflation and all this stuff. So the problem here is that you can see our last sort of great reset window. And I wanted to show you, but I didn't have it handy. But there was a really cool graphic. Maybe, Bob, you can find it while I'm talking. There was a tweet that I put out probably about 5 years ago or so, quite a while ago. And my hard drive died there 2 or 3 months ago, so I lost all my beautiful saved images. Anyway, so there was a tweet that I put out that actually showed somebody actually had did a study, and you can literally see every oh. Can you hear me? Oh, no, that wasn't. I do see YouTube died though. Streaming. Oh, it looks like it's back now. Oh, it's trying to come back. Yeah. I don't know how sustainable the Illuminati and Anunnaki and stuff, and probably as yeah, you can see it's trying to. We just kind of disconnected there on YouTube, so is interesting question. Is crypto going to zero? I can tell you absolutely crypto is not going to zero. Uh, but what's the cost of production for one Bitcoin? I can't tell. Are we even live anymore? Let's see. If I wave my hand. Does that actually show on YouTube? Yeah, you can see it's all choppy. Oh, now it says no data at all. Wow, what a mess. Oh, that's good. Oops, look at this. You don't have permission to view this page. Now, how the fuck does that happen? Oh, God. So you can see Google is actually like trying to tinker around with this, eh? Really frustrating, all this. I don't know. So you're saying that YouTube is working now? Wow, how bizarre. I'm trying to get back on the YouTube page and I'm getting the weirdest shit here. Huh, what a mess. Anyway, I don't know. Did anybody get any value out of that rant? I don't even think I even had like a cohesive message for you guys here today. Then of course all the disconnecting and stuff like that. So I would imagine most people are just going to tune out with what just happened here today. I started off the broadcast going, "What do I just sit here and go, I told you so?" That's sort of half of the reason why I'm just blabbing away here. Hey, there we are. Oh, look at that. Yeah, so the number of viewers dropped dramatically there, right? I don't know whether we're still connected or not. Looks like it's saying we. Back to our conversation about inflation. The last time that we went through one of these great resets was following the Second World War. And I might even argue that half of the reason why the Second World War happened was because it was part of a great reset. You know, if you actually look back at history and all this kind of stuff, a lot of stuff that happened around there just doesn't make any sense. Unless it's all some big conspiracy. All right, so point here is I think we are basically going through this same period here. Interesting how we're perking up here after a nice double bottom, perking up here. And of course, we had the Bretton Woods event here in the mid to latter part of the 1940s. And I get the distinct impression we're going to get some sort of, is it the Klaus Great Reset? I don't know. You get the impression Klaus has kind of like sort of disappeared. I think a lot of people at the World Economic Forum and part of all that nonsense world have been just like, you know what, we better put you away, Klaus, or else we're going to get lynched. Anyway, and I think the whole climate change thing, I think that is completely blown up in their faces too. See, you know that the 1% is given up on that whole climate change bullshit when Greta now is actually being arrested. She still believes in it, so way to go. Klaus has actually been hospitalized. Well, damn straight. I hope, I don't hope anything. Anyway, okay. So the point being that we are going through this great reset nonsense. We all know and we all acknowledge that this is basically a train wreck. We are right in the middle of the train. We're looking down. We can see that the train's wheels have actually come off the tracks. The train is traveling at about 130 miles an hour. It's one of these bullet trains. And we know that the wheels are not on the tracks anymore. That's the situation that we're in right now, folks. Do you think this train's actually going to be able to come to a grinding halt with it still upright? Or does it have to tip over and a whole bunch of us humans have to perish? I don't know. Only time will tell. So one good thing is just try and keep yourself well diversified. Me personally, I'm holding as few Canadian dollars as possible. I do have quite a bit of my exposure in the hegemony. And what I find fascinating about these crises is, like even in 2008, I remembered specifically the US Federal Reserve, they didn't even care about things like Puerto Rico, Guam. We're supposed to be American protector, American territories. I mean, quasi states. They didn't give a shit. And I remember even just, after the fact, sort of ripple market corrections and stuff following 2008. The representatives for those countries would lobby when Powell and stuff was on asking for some financial aid and stuff for those territories, and they were like, "Fuck you, we don't care about you. Are you actually part of the United States? No, you're not. Well, we don't give a shit." So what do you think the odds are that the US Federal Reserve gives a flying fuck about China? I mean, let's call a spade a spade. You saw what the Mexican peso did through the 1980s. No reason why China couldn't do exactly the same thing that Mexico went through. And of course, their society completely collapsed. Um, no reason why that can't happen to China here right now. No reason at all. And I might argue that, ironically enough, if you actually, smell everybody's poo, the United States' poo smells the least. Um, there's, I mean, the whole fiasco of China, the whole damn thing is a fraud. Tofu buildings. So that's all a con job. I'm hearing that electric vehicles are blowing up right, left, and center because, of course, they have really shitty manufacturing quality. So I could imagine that half the reason why the Tesla story was somewhat palatable and worked was because Alan was is pretty obsessive about engineering, and he understood that, and I'm sure a lot of his backers understood that there was any safety concerns about vehicles spontaneously just bursting into flames. Just keep in mind these lithium batteries. Have you ever seen what happens if you just pour a little bit of water on like a sheet of lithium? Holy crap! I mean, it turns into just a nightmare very quickly. So I can understand that to pull off the Tesla story, they had to be absolutely obsessed with safety and good quality engineering. But in China, come on. So yeah, we'll see how that all turns out. But anyway, um, the buildings, that's scary because they cut costs here and there just to line their pockets. And I mean, we all know the stories, right? Ghost town stuff. All. And yet, like I said, people have lost all hope in China that literally they're just going on murderous rampages now. There's nothing else for them to do. I mean, it's horrible what's happening there. And of course, it's all being hushed hush. So I don't think that the United States of America is actually the place that the world needs to be concerned about of imploding. It's places like China. And sadly, I hate to say it because it is my country, but they've set up China here to be just an absolute nightmare. I mean, absolute disaster here. Everything is completely upside down, underwater in this country right now. And I still am a little bit scratching my head. What is Canada actually going to do here? Because we used to be in the business of supplying commodities, but this idiot doofus leader of ours is literally trying to put the commodities industry out of business. So, what does Canada actually do? Well, actually, I was just down in the States. I literally drove the entire West Coast. I mean, everybody's got the inflation, and don't get me wrong. I mean, inner cities are a nightmare. But hell, I remember when I went to New York in the 1980s, and in fact, what was shocking about that was in the 1980s, this new phenomena of people like literally living in the streets. Um, that was something brand new, and us from Canada, we couldn't believe that people actually were like living in cardboard boxes on street corners. And I went down to New York for art history tour. It just goes to show the snobby background I came from. And it was like the middle of February, and we're like walking down like Fifth Avenue, all that kind of stuff. Maybe not Fifth. It was one of the side streets. But anyway, they're like people like literally living in cardboard boxes on the street. And we were just like, this is incredible. Well, guess what? China now has people living in tents on the street. Like, so no difference. I mean, I thought it was hilarious when Winnie the Pooh came to San Francisco. They actually had to go around and clean up all the shit off the streets. You know what this actually is a really good testament to, Andre, is and I've said this before, but of course it's terribly politically incorrect. But the absolute worst possible thing that could happen for our standard of living, our of Western civilization, ironically enough, was the collapse of the Soviet Union. Because in essence, now we are moving back to Dickinsonian capitalism, Scrooge, Christmas Carol. And in that world, yeah, gonna have people living in the streets. In fact, what I wouldn't be surprised is we're probably gonna have things like concentration camps. They obviously won't call them concentration camps, but for people that are homeless, they're going to be shuffled off and sort of put marginalized. And, like Great Britain at the very height of their empire, they basically had debtors' prisons. So if you ever got into debt and then couldn't pay the debt back, you're toast. So that, like I always think about debtors' prisons in my head. And that's the number one reason why I will never, ever become a mortgage bitch. If it means I just have to rent a shitty place, well, so be it. If I can buy the house outright, great, I will. And I've been saving my money, and all my story with Liam and stuff. But I will never become a mortgage bitch because I know that you can see the trap. The trap has been laid, the trap has sprung, and now all of these Canadians are all literally debt slaves for the rest of their lives. And what happens if the economy tips over and these people lose their jobs? They're dead. Their house, bye bye. And the banks don't give a fuck, right? They are Scrooge. Think of Mr. Scrooge. Anyway, blah, blah, blah. So, we're right in the middle of this nightmare. And I suppose the irony of it all is that we're all just waiting for this thing to break. When does it break? When does it break? When does it break? I don't know when it's going to break. I will say, though, that if the banksters have their way, it won't break. And you might find that the Dow is 200,000. Now, is it because the Dow is so valuable? So as a result, Microsoft stock is $5,000 a share? Or is it that the things that we're valuing these things in are absolutely worthless because of this nonsense? It is interesting to see while I was talking to you guys, most of these numbers are going up. But there was one number that I saw here that I was like, hey, wait a minute, this is going down. US trade deficit with China. Isn't that interesting? Look at that. That's actually going down. So that must mean that actually the situation in China is getting worse, not better. Go figure. So banksters win. Dow's going to be 200,000. Loaf of bread's $50 a loaf. No problem. Well, there's an interesting side. And that's the one thing I don't like about this Western civilization is the politicians have learned that it's actually in their best interest to do this whole inflation game. Because if you hyperinflate all these asset prices and you have things like property taxes, well, then that means government gets raises. They constantly can legally and justifiably reassess your property at a higher and higher and higher price. And the one question that I have that I actually think is going to backfire on all these idiots is what happens when all these baby boomers are basically dying? They're not at the point where they're in retirement. They're actually dying. and these houses have to be liquidated. I can't see when we have that massive glut of population, because I think what's happened here with a lot of baby boomers is they spent their whole working lives debt slaves, paying off their mortgages, and I think their solution was, look, I paid off my house, so now I'm just going to sit in retirement in my house. And thank you very much. I don't need to sell it. I'm going to die in my house. I mean, that's what happens in Japan a lot. And now Japan, hell, you can go to Japan, get really cheap housing for nothing. I mean, they really don't like, I think it's cultural there, but they really don't like moving into houses where people have passed away in them. So as a result, there's a lot of housing that's sitting basically empty over there because all these people have died. I would expect that at some point, this is what's going to happen to our Western society. So a guy like me, and I'm actually hearing a lot of people say that, 50% reduction in the house price in Canada here would be actually very normal, very natural. Anyway, so really don't want to buy a house. And certainly don't want to get suckered into buying $600,000, $700,000, $800,000 house, which, maybe I'll put like 300,000 down. So that means I got a $300,000 freaking mortgage. That basically locks us into debt slavery, Liam and I. And then all of a sudden you find that the real estate market breaks and house prices come back to normal. In fact, actually, there's a few places in like New York State, just like literally right across the border from Canada. God, you can get some huge places for 150, 200,000 US, which I've got the cash. 5-bedroom, 20-acre, 30-acre, with barn and outhouses and the whole fucking thing. Whereas I can't even, in Vancouver here, I couldn't even get like an apartment for that kind of money, let alone an actual house for Liam. So I don't know when all this, and I'm just blabbing away endlessly. Sorry, everybody. As I said, when it comes to price action, I don't really want to talk too much about like price action in the marketplace, because really, this is everything that we've been talking about for the past like probably 3 or 4 months. When is this thing going to top out? Well, it's probably going to top out into the halvening. Is this similar to what we've seen in years gone by? Well, it turns out actually this is incredibly similar to what you saw happen in 1516. And of course, this is what's going to kill all of you guys. Are we going to see like a similar dump following the actual halvening event, which happened in 1516, and it was like literally a 50% haircut in price. It happened very, very quickly, and then once it was done, then we resumed the bull. I'm still very comfortable in that camp. I think maybe it does look to me like this isn't exactly they always say history likes to rhyme, it doesn't like to repeat. It almost looks something along those lines, right? Nice bump up off of these lows, then a pullback, then a rally up to test the top end of the range, then another pullback. Then the question is, do we have to do this big ugly dump following after the halvening event? And I think the key here will be if price just stops, because that 1516, that was this timeline. There was the halvening event, and notice 17 bars. So this is even skewed a bit. 17 bars following the halvening event, this thing just went quiet. So that was sort of the key that, oh boy, something big and ugly could come down. When people just sort of accept that, yeah, Bitcoin's worth $60,000, $70,000, that's just the way it is. And all of a sudden they get rudely awakened that, well, actually, this has got a lot of room to fall if it really wants to. And this is really just like, kind of what I showed you on the stock market. WD Gann, don't overthink this stuff. 50% rule. This is Mountain Man. I think that's where we go to fill in this price gap. But, WD Gann would just say, hey, don't overthink this. Markets like to retrace 50% of whatever the move up was. This happens pretty regularly. Can I give you a timeline on when this is going to happen? What I think is probably going to happen here is notice if we go to the bottom and gee whiz, what a surprise. There is January 1st, so like the beginning of the year, right? And then we'll go from here. And you notice coming out the other side of that, well, that was a little bit longer. I guess it was 44 days from the actual bottom. And it'd be interesting, actually. You know what I've been noticing, which I thought was super cool, is if you actually look at the midpoint of the eclipse cycle, I think that's actually where the pivot is. What's that? That's 54. And then the midpoint of this, yeah, somewhere in that area. I'm not quite sure. Almost looks to me like this is one of these midpoint sort of, think of like a seesaw. That's like the middle of it, somewhere in there. So if it's something along those lines, and I can't tell exactly, and also too, keep in mind, this is like business. So this doesn't have the weekends in it. So it's a little slightly skewed. But, something along these lines, then I would be thinking that we just sort of replicate this again. Midpoint of the cycle out to here, and there you are. Friday, probably Thursday, June 27th. Friday will be an options expiry day, which means it'll probably be a light day. And usually what ends up happening is when we head into the July 4th holiday weekend, the Americans kind of like to wrap themselves in the flag. And hey, we are capitalist by Joe. In the 2019 fiasco, there was actually a US politician. It was, in my opinion, very irresponsible. But through this event right here, there was actually a US politician that came out and said, I will sacrifice my life to defend capitalism. What? You think any of these banksters would sacrifice their life to save capitalism? Come on. But anyway, and actually it would be interesting, Cole, if you could look back in your notes, when was the eclipse cycle through this? I got a funny feeling it was right in there. And then also too, really good history lesson. Is there anything that happens about the middle of March that we should always keep in the back of our mind? And fortunately, I know this from my own personal life history. So not a big surprise we had that event through there. But I guess the point I'm trying to make is I wouldn't be surprised, and I don't know whether it has to be this sharp, but it wouldn't surprise me one bit that through the end of June, beginning of July, we have our ultimate pivot. Also, too, Mr. Gann, speaking of Mr. Gann and eclipses, I was reading in this book that somebody gave me years ago on Mr. Gann, the 32nd Jewel. I don't know whether you've ever seen that book. It's a super thick book. And Mr. Gann specifically said that you should look at the market moving in quarters, and you can actually use the eclipses as sort of your, thank you, Adam. You can use the eclipses as sort of your measuring gauge for those quarterly events. So one quarter following the event just so happened to be almost a perfect midpoint pivot. 1 quarter following the event, whoa, what a big surprise, another eclipse. 1 quarter following the event will be our June, mid-June sort of bottom. 1 quarter following the event, well, we go into our next eclipse cycle. So I think you can actually make the argument, see how that works? Kind of interesting, eh? That I would fully expect that we have some sort of pivot here somewhere, let's call it the end of June. What usually happens, it doesn't have to, but it does happen quite often, is right around my birthday. There's an old adage in the market: sell in May and walk away. So usually around that time of year, there's some sort of dump. And of course, crypto loves to dump through that window as well. So in actual fact, this sort of weekly study, if we think there is Colin and his pump chasers, this is 38.2 to 50% of our entire range here, going back to our cycle low of 15,000 area. If we think of 2016, that was this price pattern, and we ultimately did pull back to 50% of its range. So really all that's saying is, hey, look for some sort of dump back down against this very significant trend line. I think this is a long-term historic trend line. Notice how off of, can't even see it, but off of that peak and then that peak. And then you notice a lot of traffic, a lot of traffic, a lot of traffic. So obviously this trend line is being respected. We actually went up and tagged this trend line, backed away, and then blew through it. And I got a funny feeling that we're basically just going to be oscillating around this trend line in the not too distant future. So what a big surprise, 38.2s. And you notice that right into sort of that first couple weeks of May, that's where I have my left-hand side of this W. So I would, it's kind of tongue-in-cheek that we say this, but I have a sneaky suspicion that your sort of first capitulation dump that actually starts marking near a bottom is going to happen right around my birthday. So it's almost cliche how it comes in, year out. Just think of Brian's B-Day. Brian's B-Day. That's another conversation for another day. As sort of like, well, that might be sort of mark the official, the beginning of the end. Let's call it that, right? I wouldn't be surprised if this bottoming process then takes like literally a month to play out. So I was a little surprised that I actually did start to see some people even posting in the TRI lounge, social media influencers and big influential people in crypto all saying that, well, they figure that the correction is done and it's now time to start going in on the buy side. And it's like, what? You got to be kidding me. It never ends. It never ends. I think people wanting to be bullish. I mean, why would we be bullish ahead of this happening event? That makes no sense to me whatsoever. And then also too, you got all this just incredible seasonality stuff staring us in the face. This is usually a pretty tough time for the market here. There's May-June window. So anyway, we'll see what happens, but I don't see how you can be bullish. And if anything, what I've been telling people, and this is what I sort of I posted in the lounge here this morning, when I look at a lot of these names, what I do see is this is Uni, and this is one of these stories that is under the spotlight this week in the news about them being officially told by the SEC you're in hot water. I think you can actually make the case that there's a pretty good looking head and shoulders top. And if that's the case, of course, I mean, you can do a measured move. Just take your hand. Boom, boom. It's projecting all the way down here. And I'm just eyeballing it. I wouldn't be surprised if you actually drew a nice little trend line off of these lows. That probably intersects there. It'd be interesting to see where is Brian's favorite fib if we look at that entire price range. What was that? That was Uni. Boom. Yeah, there's the chart that I just drew. But let's go like this. Boom. take that up there, and we'll drag that down here. And oh, interesting. I think this is a long scale. Log, like, yeah, let's see what we got there. Okay, so off of the log scale. Oh, there you go. And actually, well, check this out, right? If I just draw a real simple trend line, for that low and that low. So, what I will say is what I often see happen, this is why I like to teach the mountain man level off of these fibs, is you will often get a bounce off a mountain. The only problem is that this might just be a V bottom and then we top and then we come right back down. Seen that happen plenty of times. And you got to understand, Mr. Mountain Man, Brandon, he will buy this level and he will make damn certain that he's going to sell a bit on whatever this dead cat bounce is. And probably, if we're thinking dead cat bounces, you could probably just draw like 38.2s. Collins dump chaser zone, I suppose, in this case. So there you go, 38.2 to 50%, but this needs to be drawn on a log scale. So there you go. Oh, look at that. Brian's getting pretty good at his craft. But I suppose this is a bit off, right? So something like that. If there's going to be a trade to be done here, most times, I mean, nothing's ever 100%. Most times this is nothing more than just a dead cat bounce. The traders, they love to trade this trade, especially in the futures contracts and stuff. I'm having a great time just simply hitting 61.8s in the futures markets these days. And in actual fact, the Bitcoin short that I just put on here, that's what this was. That Mr. ICT guy, I love trading his setup. The irony of it all is I traded on many different time frames. So I don't think it's really like, his textbook setup. But this is a perfect example of this. Market's making higher highs and higher lows. Then all of a sudden, boom, stops that, breaks this market structure, right? So MSS, I think, stands for market structure shift, where we went from making higher highs and higher lows to bang, we just made a lower low now. Uh-oh, something's changed. And then you just simply draw your mountain man level off of whatever this break is, and you just hit that. And you can see we hit that beautifully. I mean, it's just absolute textbook trade. And I mean, I did it again. Don't you want to get to the point where you're selling that level right there and you can show your friends? Look at me. I'm a badass motherfucker. Bang, bang. And then, oh, look at me. I'm taking profits here. Move my stop to scratch now on this thing so I can't get hurt on the rest of the trade. And I don't know where the hell this thing's going to go. But damn, I mean, that is one hell of a trade. It's just perfect. Absolutely perfect. So there's an excellent testament to the trader trading that 61.8. Yeah, there you go. Juan, maybe Juan, you need to start a video stream for yourself. Where was I? I guess was I looking at, I think I was looking at this thing here, right? Yeah. So, I mean, there might be a nice bounce here. It's interesting how there is no market structure shift. So I don't know whether that ICT guy concept would work on something like this. I suppose, yeah, I think that's stretching it a bit. What I do see here, though, which is pretty scary, and I'm, this is, we can use this, but there's a whole bunch of these, and I did a bunch of screenshots because I kind of wanted to try and be a little bit more prepared for you guys, but of course that never works. So I had this kind of idea. I mean, you can see that if you had bought this W here, and you had followed my very simple conservative approach of selling half on a double, you would have been a seller on this big orgy pump here, right? And it's at this point, of course, where everybody in the public's like, This time it's different. You're selling here. You're going to be left behind. No, this is actually just business as usual. Adam, can you please show Jimmy and Liz this image? Because, and especially their daughter, right? Because you literally couldn't script this any better. Like I said, everybody through this was like, no, this time it's different. We're just going to go straight up. We're never coming back. And yet this is so incredibly cliche. And if you just followed the really, really simple, look at, I'm not like, I did hear one guy recently saying, well, I don't think it's a good idea to sell half on a double in crypto. All the selling half on a double in crypto is about is just establishing a risk-free trade. And I don't care whether you sell half on a double, you sell half on a triple. But you notice if you had bought this weekly W, if you got in on this killer trader trade level, well, rock and roll. We ended up like what 3xing. So you could have gotten sell half on a triple off there. That would have been what 12, 13, 14 bucks somewhere in there for your triple. But saying I'm going to sell half on like 5x, 10x, well, you completely were left behind. And what I teach actually the beginners who take the level one is we want to hunt these weekly W's. And I don't really have a problem if you, as a little old lady, came in and said, all right, I'll risk, 2, 3, 4% of my portfolio, whatever. Don't break the 5% rule, folks. I also don't think you just go all full tilt 5% right on one trade. I don't think that makes sense. What I usually do is I'll just start a nibbling campaign like 1%. Maybe I buy 1% off of this W here. Turns out that didn't double. We actually had to make a lower low. Oh, boo, hiss, hiss, boo. Then another W comes in. All right, well, we'll add another 1%. Then the weekly W comes in. All right, let's add another 1%. And whatever your average cost is, it's just best practices. Get yourself into that risk-free trade as fast as possible. And in this particular case, and I didn't hear people talking about this, which is a little disappointing, but if you did buy this and you did sell half on a double, there's no reason why you can't now start thinking about going in and adding a second car. Take that original capital that you invested and you got it back. You have a free position now because you sold half on a double. And, if and when this thing actually starts doing this kind of price action again, well, maybe go and start buying again. I do think we're a little bit early here, though. I like the idea that there might be a trade. You can see how volatile this is. But, if we look at our momentum indicators, do we see any W's here at all, folks? Looks like market tried to add W, and oh my goodness, look at that. Spat up a new M there. Ugh, yuck. M. Oh, that's probably a cautionary tale, eh? Willie's stupid. If you get an M in the MACD histogram and you get an M in, Willie is officially overbought, yellow line is above -20. This actually sets up what's called an Elotangonator. You hunt for an M and you use a 50% level, right, which would be there as your profit objective. Ring the register, take some profits off of, say, shorts off of this M up here. So I actually think that there were quite a few short setups. And there was another one that I did up here. Same sort of logic. This one was super, super popular. Artificial intelligence going to take over the world. Yeah, whatever. Willie stupidly overbought. Huge RSI bearish divergences. Huge MACD bearish divergences. You can see I've drawn the reload zone where I would buy this thing if it came back down to earth. Really, I don't think I'm really that interested in reloading on something like this until we get all the way down to 20 cents here. So here we are at 85 cents. Oh boy, this thing could still correct a long way. And you tell me, do the indicators look at all bullish here? I don't see anything here. that says I should be bullish. So, like I said, I was a little surprised when I heard recently people say, all right, yeah, that's it. The correction is over. Time to start going loading back up on the long side. It's like, you got to be kidding me. That's patience and discipline, eh? Oh, well. So great to see the green back on the screen, but just try and put everything into context. And the easiest way for you to keep yourself out of trouble is just insist that you see W's in your indicators and you see W's in price. And I remember, a week or two ago, we were talking about these memes like SHIB and all that. And I said, look, if you want to trade this and you want to take a shot on this little W trying to front run the bot here, great. But if we break these lows, you better get the fuck out of there and take the loss. And that's exactly what you should have done here. And of course, does anybody want to hear me say stuff like that? Well, you should take a loss here. Well, that's not going to get you the upvotes. That's not going to get you the million hits on your videos and everybody circle jerking about how wonderful you are. But this is all about risk management now. I mean, that's a new M that's come in here. And for whatever it's worth, if you are botting away here, well, now you got to literally drag your tool to the next low. Now, I think this was all done off a regular chart. So like that. Notice we have broken 66% here. So I actually don't even think that the bot setup is even valid anymore. And this thing actually looks like it's in full correction mode. So I fully acknowledge you people in the public, you probably do not want to hear this message that I'm telling you here today. But I'm telling you here today, and this is fiduciary responsibility, there is no signs of this thing being bullish at all. And I would imagine most of these names that we go through, you're not going to see, three-step setup. Location. All right, well, we dipped into mountain, and I can understand there are probably some traders who are going to take shots off mountain. But that's step one, and now we're not even there anymore. So we're not even in location now. How about indicator confirmation? Do we have any sign out of our indicators that this has actually bottomed out? No. And since we don't really have location, we don't have indicator confirmation, we can't even think about even going on to step three, which is then at that point, you start hunting for W's in price. There's no W's here. So it's just, if anything, I think this is a case where you're going to have to learn patience and discipline and just ride this out and just wait. But the good part about this is if you did take our education program and you did listen to what we were trying to teach you, then this is now finally the correction that's needed to happen, that's bringing price back down into reload zones. Keep in mind the last time that we actually got a nice little consolidation that set up a breakout was back last fall. So anybody who started the education program in like December or something, our whole message was, well, you kind of missed the bottom because it was last October, November. And now you have to, as Adam just said there, very well said, right? This is basically a nuclear bomb going off here. Kaboom. And now we got to let the mushroom cloud settle down. You got to let the dust settle. And, I mean, for those people that do measured moves, I hate to say it, but ironically enough, and, this is poor old Stuart, in videos on the site recently, I did downside projections on things like Rend, and he's like, you got to be kidding me. You're expecting price to go all the way down there? Yeah, unfortunately. So, this, ironically enough, this is a measured move. So you should be able to go from the neckline back up to the head. I got to make sure that it's drawn correctly and then just project that off of the neckline, and that should be your price objective. And that's, oh, what a surprise. 78.6 right back against key lows. So is there really any hurry to do anything here right now? No, not at all. And unfortunately, you guys aren't going to like that message, but this is half the reason why I spent the first hour of this video just rambling nonsense, because there's nothing to really get excited about in the market right now. But if you can be patient, at least we've waited for this correction to finally happen. So now, if you can just be patient and go through the process, trade location, indicator confirmation, price structure, big fat W, go, then you probably have some really good investment windows here. And I don't think that this happens. Like we said, I don't think we actually go back into sort of full on bull mode until, sadly, the end of June. That's way over here. So this next month and a half, I think it's going to be lots of back and forth. Don't get me wrong, but I don't think we ultimately bottom and start actually a new bull market until we get through this seasonal window. Yuck. Okay, do need to spend some time answering questions that were specifically asked. So maybe Chris, you can make a timestamp reference or something on the video. I did spend some time talking about, things like Bitcoin, and, I gave you a couple names there that I'm watching in the market for potential trade idea. Keep in mind, I've got both a Bitcoin futures trade going and the Bitcoin spot market going. So I've actually done both of them as an illustration of how you can either do this through the futures markets now, or you can do this through the spot market. So we've got, if anything, I'm exceedingly pleased at the way that this program has evolved, because the universe is a fractal. It doesn't really matter what time frame, what asset, what exchange, what type of product. The universe, the concepts are universal. So, okay, let's head on over to the Q&A document and just see if I can answer some questions, and then I'll head off to Lily, and then hopefully you guys have a nice, enjoyable rest of your day. All right. So number one, hey, Brian, hope you are well, and thank you for everything you do. Oh, well, you're welcome. Quick question about futures. Why do you trade the micros and not the E-minis? Oh, it's cost. Remember, I'm a chicken shit. I mean, this is starting to get expensive, especially E-minis nowadays with the hyperinflation and the prices that we have. I don't like risking a lot of money. And so the number one reason here that I do all of this is I want to be the demonstrator of best practices. So you in the public with a small account, right, you can go, hey, you know what? I think I can do this too. So that's the absolute number one reason. I like the small dollar sizes. Is it just simply the risk per contract? Basically, yeah. Also, what exchange or where do you trade futures? For example, Interactive Brokers, AMP, etc. Have an account at Interactive Brokers. It's well funded. Everything's sitting there ready to go. I have an account with AMP. It's sitting there ready to go. I'm trading with the Top Step guys. I got a combine going there, and it's nicely profitable. I'm about a little over a third of the way to their profit objective. But more importantly, I'm trading the micros. So they have like thousands and thousands of dollars objective, but like I take like $50, $100 on these trades from the market. So there's an old expression that always goes, if you can't trade small, you got no business trading big. So I would prefer to demonstrate with you guys small accounts, small trade sizes, rinse and repeat, 2-to-1 risk reward, sell half on objective if you can, stop to scratch on remaining, and just keep doing the same thing over and over and over. Yeah, I think that's probably the best way to describe this. I have accounts actually funded, ready to go. I got 50 G's sitting in an AMP account. I got 200 G's sitting at this US dollar sitting in an Interactive Brokers account. I could trade either place. They're all ready to go. And I'm also trading with Top Steps combine money. So I call it a little bit of everything. um, I like the combine because you have to be honest with them. I mean, even if you have your own account, I mean, I know a couple guys that have their own accounts and they're trading them and they never should have gone there. Well, I like the combine and trading other people's money because it keeps you honest and you end up not losing a ton of your money. If you can't do this, fine, the combine dies, and whatever money you had to put up to do the combine, that's gone. But if you can do it, then you can always switch to your own money. Um, I will say that, um, got a little spoiled there with the whole crypto market. I sort of left the professional futures trading world. Um, and only about a year and a half, 2 years ago, did I say, all right, you know what, I'm going to get serious about these futures trading again, trying to trade for profit on a daily basis, and holding myself to account. And I think probably about the first 6 months or so that I was getting back in, man, I was losing money right, left, and center. So, if anything, me personally, I like the idea that I set up the whole Top Step Combine thing because you can't bullshit, you can't lie. I mean, if you fail, you fail. There's nothing you can do about it. It's clear as day, and all the accounting is all 100% legit because it's nothing to do with you. It's somebody else's money, and they're tracking you closely. So I actually really like, as a way to sort of get yourself back up to speed and actually trading like a professional, that you go the combine route first and prove to not only yourself, and I'm also sort of talking to myself, um, but prove to yourself that you can actually do this. And the easiest way to prove that you can do it is trade other people's money. Before you go, and I mean, like I said, I've got lots and lots of money I can risk in the marketplace if I feel like it, but I would rather risk Nebraska's money. And if I get to the point where I'm like, you know what, I'm doing pretty good, I'm rocking and roll, I'm making a profit on a regular basis, things are doing awesome. Okay, fine, I can always switch to my own accounts. So anyway, that's my answer there for you. Number two, hi Brian. Have you finished adding your LOL portfolio? I haven't seen your new names recently. Haven't really been doing much in the LOL portfolio. I mean, you heard my comments recently about uh, these ledgers and clicking on links in your email and having the MetaMask set up. And I made an absolute disastrous mistake recently in that space. And so as a result, I've been extremely gun shy doing anything with that Ledger account, which is, it's a little disappointing unto itself that it's gone this route, but, it is what it is. Where is that spreadsheet? I have been having fun throwing in stink bids on things like the Solana. But remember this thing started out, it was funded with $500 and it went zooming all the way up to like what, 1,500 $1,500, and now it's back to $1,000. And I even said that, I wouldn't even be surprised if this thing has to come back down to $500, $974 now. So I got stink bids working and I got some filled, like this win here. I've done this one here. This one was kind of popular. Went and picked up a little bit of this nanny nibble kind of idea against the bottom end, the range idea here. Working stink bids. So, and I have been posting these. I think I don't know whether I actually post this one. Just got filled here yesterday, but I can definitely post that in the Brian's trades room. You should be able to, at any given point in time, come in here. And if I do anything in the marketplace, we'll say filled on another stink bid. And this one was YN or Y N Y W Y N. But most of these things you can see, I'm on the buy side here, and buying against the bottom ends of ranges, that kind of stuff. Probably not going to be doing much selling, although I was a bit surprised. There was one name, and actually I was contemplating putting in the newsletter this week, but I didn't. But Zug on the site, he got us to buy this mute idea. The mute itself, and this is one thing I really don't like about TradingView. And if I understand correctly, there are other sites that are actually going to show you the historical data. I mean, just because this thing goes off the board in one place, that doesn't mean that we shouldn't be able to see the old data. But we were able to bang out a double already once on this mute. I might have that on a tweet. Where would that be? That didn't work. Nope, that definitely did not work. Yeah, all right. Did I type that right? See our investor view. Darn. Anyway, I know we did bang out a double, and this is actually what I think I wanted to show you over here. Yeah. So we did bang out a double. This is the little old lady portfolio. I haven't really done much on this portfolio, probably in the past, I would even say the past maybe 2 or 3 weeks. I'm just watching. As I said, I got my fingers burnt here, and I'm very, very gun shy. And of course, I only have a certain amount of cash, if you will. Actually, that's not even an example. This is a total flyer that we took on Luna coming back. But here you can see I've got about 3 G's in Tether. Actually, Chris told me I have some cash with the account that he sold some stuff for. And then also Eddie, he's got a bit of cash that I need to repatriate back to this account. So maybe that takes that up to the better part of 4,000, maybe 3,500, who knows, somewhere in that area. So that's the quote unquote dry powder that I have right now. And what I'd ideally like to do is on some of these names where the numbers are back down around only a couple $100. This POLS, we only had like 130 bucks in there so far. I mean, right now it's 330. And I would imagine these prices are quite a bit lower now, but you can see, where's a good example? Yeah, this Cello. I mean, I wouldn't mind trying to get that up, 400 or 500 bucks. This EOS, wouldn't mind getting that up a little bit higher. Some of these names, sadly, a few of these names have actually just completely died. This DREP, it went tits up. It's just too bad, actually, because we missed a really nice sell half on a double opportunity there, but oh well, it is what it is. So if I see some of these names that are in the portfolio that are relatively low balances right now, and I do see that they're going to set up buy setups, then I'll go in and add to those positions. But for the time being, I'm really just cooling my jets. With crypto, I'm not in a big hurry to do anything. I mentioned that mute earlier because they reorganized the thing into this koi, and they reorged it at basically a nickel. So we got the mute was exchanged to koi. They did the appropriate, change. I think it was like we had 500 before, then we got 5,000 or something like that. And then the darn thing went and doubled again. And you can see this is a daily chart. Even yesterday and even briefly, first thing this morning here, we were actually up at another double level on this asset, but I haven't been talking to Zug, so um, um, I didn't get a double off on that, even though I suppose I could have. And if anything, this is a really good testament that I tried to sort of fumble my way through this using this ledger and cold storage wallet and trying to get friends to help me to get fills and stuff. And I don't think this strategy worked very well. Could have done much, much better performance wise. And of course, I also had money stolen from us. So, I mean, if anything, it's good to see. I mean, we didn't lose money on balance. Count's still up, and it has quite a bit of wiggle room. I wouldn't be surprised over the next month or so that you actually see the crypto market come off a pretty good chunk. And, same sort of thing like the Solana, it's already starting to come back down to earth and all those prices. I wouldn't be surprised if this thing actually comes right back down to our original investment levels. Having said that, if I'm long and I'm in a name and I've already sold half on a double, I don't really care. This even though it says current value and there are prices here, these are paper prices. They're paper profits. They're not actual realized profits. And I still think that the crypto market is going to be much, much, much higher in a year or two down the road. So I'm not in a hurry to sell any of this stuff at all. If anything, I just want to go in and figure out which ones am I kind of underweight in, and can I get those numbers up into that sort of $400 or $500 neighborhood? And I think that's going to be my primary strategy, probably over the next 3 or 4 months, is to just, well, let's say 3 months, is to just try and balance this out a little bit so that most of these numbers are sitting in that $300, $400, $500 area. So that's my strategy with regard to the little old lady portfolio. Stuart and I have been working very hard to try and get this thing back up on the website and operating correctly. This is sort of our latest attempt to get all of the numbers accurate, at least to just current holdings and the current values. What's fascinating is, these are basically the same numbers. You can see the UST balance 3044, and of course we have this 3044 USD. We no more USDC because Brian fucked up there. And yet the irony of it all is that when I actually go to the website, I mean, maybe it's operating now, but this was, I mean, it's almost like bizarre because you go to little old lady page and theoretically it should just be doing a straight cut and paste. And yet look at these funny numbers. I mean, they just don't make any sense. It's so baffling. What the hell's going on here? It just doesn't make it. This should just literally be a cut and paste. But anyway, the point of the matter is there is no logical reason why these numbers are being reported the way they are. And yet this is like literally the sheet that they're being reported off of. And this is exactly the same information as this sheet. I even went through and I totaled it up because I didn't believe the math, right? I did the math here, and then all this is just sum this column, sum that column, and it came up with that number there. And then I said, okay, it must be wrong, so I'll do it again. And this is just sum that number, sum that. It's the exact same number. So I don't understand what the fuck is going on here. It makes no sense other than Spirit does not want me doing this. That's the only way that makes any sense here. It's baffling. It's absolutely baffling. So my apologies, site members. And I've said repeatedly, if you want to know anything that I've been doing, of course, pop into the Brian's Trades room. I'll be more than happy to, basically post every single trade that I'm doing here. And if you want to, if you have any questions at any point, and you're like, well, Brian, I paid for this subscription. Can you please at least give me an updated screenshot of what it is you have on your ledger? And I said that I was going to do this, so I'm a total open book. I would just take a screenshot of this. This is basically what's on the ledger. Where is it? This one here. This is it right here. And I don't understand why just a simple function of adding these columns up, it works here and it works here, but for some fucking reason, it just won't work here. It makes no sense to me at all. All right. And on that note, how many questions did I leave unanswered? All right. So there you go. Been doing a little bit of nibbling on the SOL portfolio, just having fun in SOL land. Haven't really done anything on the ledger because I'm just so scared shitless of that stupid thing. All right, last question here. Let's see if I can get this answered in 5 minutes, and then I got to get out here if I can't. And it's just too difficult of a question to answer in a minute or two. Then I'll address it tomorrow in the site show. So I have a question regarding the weekly commodity trends study. Is there a particular reason why you adjust the formula of this? The weekly 50% level, 52-week 50% level. And it should give a positive reading if the market is above, or the fast average is above the slow moving average. And that's the limit to how do we describe this? The mechanics of the scoring, if you will. I had a wonderful spreadsheet, and of course, as I said, my hard drive blew up, and which means I lost all my bookmarks, and I suppose I have it somewhere in here. But I had an absolutely cool spreadsheet that was actually built by site members years ago. Maybe even weekly commodity trend survey come up for that. Well, let's see what comes up. Oh my goodness. We got like 4 different things that all came up for this. Darn. I don't see any of them that are what I need to see. I used to have a really cool spreadsheet that had a really cool little image on it. Here, nope. Here, nope. So it's not this. Maybe I had it over. Let's see. How can we do this? No, it's gonna take too long. Damn it. Anyway, I had a really cool spreadsheet that I actually built with a student. And he actually went on to create a WordPress site. And it totally awesome, absolutely awesome service that he created. Unfortunately, because the blog. Damn it, don't have it. Fudge. Because it was he's using like live data that he scrapes. You can't really share it publicly, or else all the people start getting freaked out online and all that kind of fun stuff. So he has to sort of keep it himself, or else he could get into legal trouble. So I'd show you that, but anyway, I was kind of hoping I had the weekly commodity trend survey spreadsheet here, but I don't see it. Is it due to the inherent statistical volatility factor? No. Damn, I wish I could show you that darn picture. You know what? Let me think about this tonight, and then I'll circle back around and I'll give you a more thorough answer, and hopefully I'll find that spreadsheet in my Google Drive here somewhere and show you the image that it is that I want you to see. It's the sine wave image, and just based purely on whether the asset is above or below the 50% level, it's going to get a score on that, or whether the asset has the 13 EMA above or below the 30 SMA on the weekly chart, it'll get a score based on that. If the market is below the 50% level, but the moving averages have crossed over bullish, that's when you're going to get the absolute best technical score. And conversely, if the asset is above the 50% level, and the moving averages just cross bearishly, that's when you're going to get the worst technical score, right? Outright sell signals and all that. In actual fact, here I even have the weekly commodity trend survey on here, so you can see, you know, like this SHIB, it's giving a 5 reading. So what the heck does that mean? And probably I'm going to leave the conversation at this here today, and then I'll head off to Liam. There is the chart. Go weekly chart. We'll get rid of all this other stuff. We'll put on here TRI's moving averages. So let's, I guess we can get rid of all this drawing stuff. All right. So the asset's going to get a bullish score because the 13 EMA is above the 30 SMA. And then the 52-week range, right? So here we are, April 2024. So April 2023 is, so 52-week range, there's the low. There's the high. 50% level is right there. So the moving averages are bullish, and we're below the 50% level. So that gets a relatively positive reading. If this was 20-25% below that 50% level, then I think it gets the absolute best reading, which is a 6, which we don't see very often. So right now, this asset's about 14% below the 50% level. If this thing got down to like 20, 25, 30, I'm not exactly 100% certain what numbers you answer to generate 6, but it is below the 50% level of the 52-week range. And so you can see price 9, low is 5, high is like 20. So the 50% level is 10. So it's below the 50% level. So it gets a positive reading there. And the 52-week moving average, the weekly moving average, fast moving average is above the slow moving average. So it gets a positive reading there. So that makes sense why it's giving a 5. And the rule basically is, I mean, if you get a 6, then that's a really, really discounted, really good looking name. And if this thing dips back down greater than 20-30% correction, you know, maybe even comes right back down to the original market structure, then I think it probably is going to give us a 6. If we, you know, have greater than, I think it's 25% is the threshold So that's like right in there. And then what my recommendation is you as an individual, you go, all right, so this asset has positive moving averages. It's below the 50% rule. The weekly commodity trend survey says that it is investable. So now you drill down to your daily chart and you hunt your setups. How can I get long? Now, as long as the chart looks like this, there is no buy, right? You want to see bullish momentum divergence. You want to see W's in price, et cetera, et cetera. So that would be the easiest way to answer your question here is, and in fact, why don't we do a follow-up tomorrow in the Monday show? We'll go through these fives and hopefully you understand why each one of them is a five unto itself. And then maybe we'll even look at some of the fours and why is it that this is a four? Maybe it's because the moving averages aren't as bullish. Like I can already see Cripple here. These moving averages are basically the same. So it's not like you're going to get a huge positive reading out of the moving averages here. Same here. This one here, H bar, you can see the fast moving average is actually below the slow moving average. So hopefully just that very quick explanation explains how the weekly commodity trend survey works. And on that note, I really do have to get out of here. I really shouldn't be late for Lily. So if you could all just wish me and Liam good luck on the road today. And slow and steady wins the race. I don't think there's a big hurry to do much in the market right now, unless of course you are interested in shorting, which I think most of you probably aren't. So if you are interested in buying, I think you just cool your jets. I mean, the good part about it is actually we have a short list. What are the names that if I was going to buy, I want to hunt setups on. It's interesting how we were interested in hunting setups on this ship. They didn't work. And now we're sort of sitting back on the sidelines waiting. And like I said, we can actually go through these tomorrow in the daily brief video and just see whether are we close to a buy. I think it was about halfway through the week last week, or maybe it was the previous week. I actually did go through a lot of the names, and maybe we'll try and finish that off. This spring LOL portfolio, I think we got down to something like, I think it was somewhere around, well, anyway, I think I asked Chris to write down as far as we got. But I think we got through a huge chunk of these, giving you specifically the levels that if I did want to buy, I would be hunting. We can always circle back around and review that. Most of these charts should have those levels already still on them. Of course, TradingView did go and screw up my charts there the other day, so maybe they're all gone. Oh, yeah, looks like they fucked me. Tell you, man, I'm not having very good time with these computers these days, so I'm a little bit choked by all that as well. So anyway, that'll give us something to look forward to tomorrow. Maybe Chris can remember and remind me to circle back around. All right, gonna leave it at that. Really should get out of here. Wish Lily and I real luck on the road. I hope I gave you some value here today. I can understand if you're kind of like, Brian, that wasn't one of your best performances. But what can you do? All you can do is try your best, right? All right, have yourselves a great day. Slow and steady wins the race. Wish me luck on my shorts here. Looking for Bitcoin futures to gap open violently here lower since the spot market did come off a bit more here since the Friday close. So let's see where this takes us. This might cascade nicely lower. Although, we are coming into areas where maybe we'll find a bottom. Well, we'll see what happens. Slow and steady wins the race. Have yourselves a great rest of your day. PMA for the win. The only thing left for Brian to say to you good people is bye for now.